Alex, a young professional, stared at their bank statement. Confusion filled their face. The numbers just didn't add up. Despite working hard and earning a decent salary, the balance seemed to dwindle faster than it should. Where did all the money go? The salary was decent, yet saving seemed impossible. Frustration bubbled up. Bills, rent, groceries, and unexpected expenses seemed to eat away at every paycheck. It felt like a never-ending cycle of earning and spending with nothing left to show for it. There has to be a better way, Alex muttered. They couldn't help but wonder if there was a secret to managing money that they were missing. Was there a strategy that could help them break free from this financial rut? A thought popped into their head. What if, instead of just working for money, I could make money work for me? This idea was revolutionary for Alex. It was a concept they had heard about but never truly understood. This question marked a turning point. It sparked a thirst for financial knowledge. Alex began to devour books, articles, and videos on personal finance and investment. They realized that understanding money was the first step towards controlling it. Alex realized they knew little about managing money, let alone making it grow. The world of finance seemed complex and intimidating, but they were determined to learn. They started by understanding the basics: budgeting, saving, and the power of compound interest. This realization was the first step towards a life of financial freedom. Alex knew that the journey would be long and challenging, but the desire for a secure future fueled their determination. They began to set financial goals and create a plan to achieve them. It was time to explore the world of finance and investment. Alex immersed themselves in learning about different investment options, from stocks and bonds to real estate and mutual funds. They wanted to understand how to diversify their portfolio and minimize risks. Alex knew they needed help. They had heard whispers of financial gurus and investment strategies. Seeking advice from professionals and attending workshops became a part of their routine. They wanted to learn from those who had successfully navigated the financial landscape. Could these hold the key to unlocking their financial potential? Alex pondered over the possibilities. They knew that making informed decisions was crucial. Every step they took was a step closer to financial independence. The journey wouldn't be easy, but the desire for a secure future fueled Alex's determination. They were ready to face the challenges head-on, armed with knowledge and a clear vision of their financial goals. It was time to take control and learn the secrets of building wealth. Alex was no longer just a passive earner. They were becoming an active participant in their financial destiny. The path to financial freedom had begun. Determined to take charge, Alex sought guidance. They had been struggling with their finances for years, feeling overwhelmed by the complexity of managing money. Alex knew it was time for a change. They found a mentor, a seasoned investor named Sarah. Sarah had a reputation for turning financial novices into savvy investors. Alex felt hopeful for the first time in a long while. Sarah had a knack for explaining complex financial concepts in simple terms. She used charts and real-life examples, making it easy for Alex to grasp the basics. Their first meeting was an eye-opener. Alex realized how little they knew about managing money, but instead of feeling discouraged, they felt empowered.
It all starts with understanding your money, Sarah explained. She emphasized the importance of knowing where every dollar goes. Sarah introduced Alex to the 50-30-20 rule. This simple budgeting method provided a clear framework for managing income and expenses. Allocate 50% of your income to necessities, she said, like rent, groceries, and bills. Next, 30% goes towards your wants, dining out, entertainment, and hobbies. Lastly, the remaining 20% should be dedicated to savings. This is your safety net.
Alex, initially overwhelmed, started to see the logic. The 50-30-20 rule made budgeting seem less daunting. Tracking expenses and budgeting suddenly seemed manageable. Alex began to see where their money was going and where they could cut back.
Sarah stressed the importance of living within one's means. She warned against the dangers of overspending and the trap of consumer debt. Avoid debt like the plague, she warned, especially credit card debt. High interest rates can quickly spiral out of control. Armed with this newfound knowledge, Alex felt a sense of empowerment. They started reading more about personal finance, eager to learn and grow. Alex felt a surge of motivation. They were determined to take control of their financial future. The fear and uncertainty began to fade, replaced by confidence and clarity. They realized that financial security wasn't out of reach. It was about making informed choices, being disciplined, and staying committed to their goals. It was about making informed choices and being disciplined. Every decision, no matter how small, contributed to the bigger picture of financial stability. The journey had just begun. With Sarah's guidance and their newfound determination, Alex was ready to take on the world of finance. The future looked bright.
Saving is crucial, Sarah acknowledged. But it's not enough. Saving helps you set aside money, but it doesn't necessarily help your money grow.
Alex looked puzzled. He thought saving was the best way to secure his future, but now he saw the limitations.
Sarah continued, inflation eats away at your savings. If your money isn't growing, it's losing value. She introduced investing. It's not just for the wealthy, it's a tool anyone can use to grow their money. Investing allows your money to grow faster than inflation. Sarah explained compound interest, which boosts financial growth over time. It's like magic, she said. Compound interest means your interest earns interest, creating a snowball effect. Your money earns interest, and then that interest earns interest, leading to exponential growth over time.
Alex left the meeting with a newfound understanding. Investing wasn't just for the wealthy, it was a tool anyone could use to build long-term wealth.
The world of investing seemed vast and intimidating.
Let's start with the basics: stocks, bonds, and ETFs.
Stocks represent ownership in a company.
When the company performs well, your investment grows. Bonds are like loans to governments or corporations. They offer regular interest payments and are generally less risky than stocks. ETFs, or exchange-traded funds, are baskets of stocks or bonds. They offer instant diversification and are very accessible for new investors. Mutual funds are professionally managed investment pools. Active investors try to beat the market, while passive investors aim to match the market's performance with index funds. Trying to predict short-term market movements is risky. Instead, focus on investing consistently over the long term.
With each lesson, I felt my confidence grow. As I delved deeper, I realized that investing wasn't just about picking the right investments, it was also about avoiding common mistakes.
Emotional investing can be your worst enemy. Don't let fear or greed dictate your decisions. Chasing hot tips and trends is another recipe for disaster. Do your research and invest in companies you understand. Investing is a marathon, not a sprint. Create a budget, stick to it, and invest consistently. Even small contributions over time can lead to significant wealth accumulation. A financial advisor can provide personalized guidance based on your individual goals and risk tolerance.
Months flew by. I diligently followed Sarah's advice. I tracked my expenses, created a budget, and started investing regularly. I learned to differentiate between wants and needs and the importance of living within my means. The transformation was remarkable. I no longer felt overwhelmed by my finances. I had a plan, a budget, and a clear understanding of how to make my money work for me. The initial fear had given way to confidence and excitement. I was finally in control of my financial future. The journey had its challenges, but I persevered. I learned from my mistakes and celebrated my successes. Most importantly, I realized that financial freedom wasn't about getting rich quick. It was about making informed decisions, being disciplined, and staying the course.
Alex's story is a testament to the power of financial literacy. It highlights that anyone, regardless of their background or income level, can achieve financial freedom. The key is to take that first step, to seek knowledge and to be consistent in your efforts. Don't let fear or procrastination hold you back. The world of finance may seem complex, but it doesn't have to be. Start by educating yourself. Read books, listen to podcasts, and seek guidance from trusted financial professionals. Remember, the best time to plant a tree was 20 years ago. The second best time is now. Take control of your financial future today. Start small, be consistent, and let the magic of compound interest work its wonders.